Welcome to This Explainer. I am absolutely thrilled to have you here today because we're going to decode what is arguably the ultimate tool for MSME working capital. You know, if you run a business, you already know that capital is literally the lifeblood of your operations. And today, we're going to show you exactly how to keep that lifeblood flowing incredibly smoothly using cash credit loans.
Let's be real for a second. If you're a business owner, you're probably all too familiar with the constant, really high-stakes balancing act of managing daily cash flow. Right? You've got to pay your suppliers on time, you need to purchase raw materials or stock up on inventory, and all the while you're just waiting, sometimes agonizingly long, for your customers to actually pay their invoices. It's a stressful cycle, and honestly, it can choke the growth of even the most profitable businesses. But what if there was a financial facility designed specifically to bridge this exact gap?
Enter the Cash Credit Facility, or CC for short. So what is it? Cash credit is basically a short-term working capital finance facility extended by banks. It's primarily secured against your current assets, meaning your everyday stock or inventory, and your book debts, which are just your receivables. But here is the absolute superpower of this facility. Interest is charged only on the utilized amount. That's huge. You get a sanctioned limit, sure, but you aren't paying interest on that entire chunk of money, only on what you actually draw down.
So here's our roadmap for the explainer today. 1. Understanding cash credit. 2. The drawing power concept. 3. The 8-step application process. 4. Comparing leading banks. And 5. Your trusted expert partner.
Okay, let's dive right into Section 1, Understanding Cash Credit.
Let's contrast cash credit against overdrafts and term loans so we can see how it actually works. You see, with a term loan, the bank hands you a lump sum up front for something big, like machinery, and you immediately start paying fixed EMIs on the whole amount. Overdrafts, on the other hand, well, they offer a running limit kind of like cash credit, but they're typically secured against fixed collateral, like your property or fixed deposits. Cash credit is really unique because its security is just your everyday business assets, your stock and your book debts. It basically functions as a running account that's perfectly tailored for manufacturing and trading businesses with active inventory cycles.
Moving right along to Section 2, the drawing power concept.
Now, you might have a sanctioned limit of, say, 1 crore, but you can't just write a check for that today. Your actual withdrawal limit is dictated by your drawing power. In plain English, drawing power is simply what you have minus what you owe, adjusted by a safety margin. You can literally never draw more than this calculated number, even if your total sanction limit happens to be higher.
Now, what's really interesting about this slide is how strict banks actually are with these components. Did you know banks won't finance a dime of your receivables if they're over 90 days old? That's right. And eligible stock is always valued at cost or market price, whichever is lower. Then you have to subtract trade creditors, which is what you owe your suppliers. And finally, the bank shaves off a 25 to 40% margin just as a safety net. So the bottom line? The slower your customers pay you, the lower your borrowing limit actually drops.
All right, let's demystify the bank's actual playbook in Section 3, the 8-step application process.
Phase 1 is really all about preparation. Step 1 is the audit of your business. And here's a quick pro tip for you. Leveraging an existing current account banking relationship drastically speeds this up, simply because they already know your cash flow history. Step 2 is confirming that cash credit actually beats out an overdraft for your specific needs. Then steps 3 and 4 move you straight into the digital age, submitting your KYC documents and running your file through online pre-qualification tools to instantly gauge your eligibility. And this brilliantly illustrates that getting the money in Step 6? Well, that's definitely not the end of the story. Step 7 introduces strict, ongoing compliance. You absolutely must submit stock and debtor statements every single month, usually between the 7th and the 10th. If you fail to do this, banks can literally freeze your limit or charge heavy penalties. Finally, Step 8 is the annual renewal. You see, cash credit is only sanctioned for 12 months at a time. The bank is going to review your financials every single year to decide if they want to renew, enhance, or reduce your limit.
Next up, Section 4, comparing leading Indian banks.
So here's the classic strategic choice you have to make as a business owner. On one side, public sector banks like SBI or PNB and institutions like SIDBI offer significantly lower interest rates. We're talking often in the 8 to 9% range because their rates are linked directly to the RBI's repo rate. However, the processing can be pretty traditional and, frankly, slower. On the other side, private banks like HDFC or ICIC offer blazing fast, highly digital processing, but you definitely pay for that convenience with higher interest rates, which typically range from 10.75% all the way up to 22% or even more.
But wait, it's not all just bank policies. For MSMEs,
The landscape is incredibly well supported by government initiatives. The CGTMSE cover is a massive advantage because it can provide a credit guarantee that heavily reduces or sometimes entirely eliminates the need for you to pledge collateral to secure your cash credit limit. Plus, MSMEs fall under Priority Sector Lending, or PSL. Banks are actually mandated by the RBI to hit certain lending targets for these sectors, which means they are highly incentivized to offer you competitive pricing and faster processing just to meet their own goals.
Which brings us to our final section, Section 5, Your Trusted Expert Partner.
So, the absolutely crucial point here is that you don't have to navigate this whole maze alone. The MSME consultants specialize in bridging that gap between banking complexity and your business's success. They actually assess your specific limit requirement using standard banking models like the turnover method or MPBF. They meticulously audit your documents before submission so your application doesn't just get bounced back. And most importantly, they handle the direct liaison with bank relationship managers and credit teams, basically absorbing the friction of the entire process so you can stay focused on what you do best, running your company.
The MSME consultants assist micro and small enterprises, agri-entrepreneurs, and businesses in securing the absolute best institutional credit at a completely transparent price. You can reach out directly via WhatsApp or phone at 98-741-67673, or, honestly, for the most streamlined experience, just download their Loan Ready app to start your pre-qualification journey right now.
We've covered the mechanics, the math, and the strategy. Now the choice is completely yours. Ask yourself, are you running your business, or is your cash flow bottleneck running you? Use this knowledge, reach out to the experts, and take command of your financial fluidity. Thank you so much for watching this explainer, and here's to your massive business growth.